the event secretary. I would say you have a very generous words for all the panelists. I believe you're speaking very high. I would find myself, I am more humble, what you have said. I wouldn't believe in that. I still feel I am a seeker, and it's just a sheer greatness that is on your part. Thank you so much. Once again, I am taking this opportunity. I want to extend my words of acknowledgement, my words of appreciations, my words of thanks to our distinguished the panelists. They are joining from the international fronts. Then we have the knowledge partners, academicians, reps from the corporate industry. Then we have all the near and dear scholars. The thematic area behind this initiative, that is the global economy, the entire global economy that has a new shift. I would say it is the entire rebirth of the global economy. On the one side, we could find this health emergency that has a very devastating impact on the social aspect of the life, on the financial, in the form of the financial crisis, in the form of the economic crisis as well. But at the same time, we need to find out that this is, in fact, this is a revolution in the habits. So we have to unleash ourselves. We have to be more compliant with the changing landscape of the life. So from that perspective, we are looking into two thematic areas for this collective wisdom, I would say. It's not a thoughtfulness, it's a collective wisdom. Ultimately, we have to bring into focus what is the way forward, what are our recommendations, what is the working knowledge that we can give into the minds, into the hands of the economic users and the policy-making institutions. So the first, the thoughtfulness that we would invite, that is from the perspective of the financial resilience, that is from the perspective of the financial sustainability during the times of the economic crisis. It was a time when the decades we need to bring a change in number of days, now the life is very fast. Now it takes just a few days to bring a change in the decades of the life. So that's why I said this is the rebirth of the entire global economy. Since the digital transformation, digital economy, that is taking the form of the new life. So it becomes very important that we have to achieve financial sustainability in the form of the economic, financial, and social democracy. That is the word I would use for the financial inclusion. Once again, my words of thanks, my appreciations to entire panelists, near and dear scholars, for sparing your time out for this highly important strategic nature of this thoughtfulness. Now, I wouldn't take you more time because we have to travel along ahead. So I would request to the guest of honor. He's one of the, I would say, the important hallmark of the Academia of Pakistan. So, sir, I would request the thoughtfulness of the great Professor Dr. Amir Firoz Shamsi. Sir, please enlighten the audience, enlighten the participants with the thoughtfulness of the wisdom. Sir, over to you.
Usama, thank you very much for this intro. I am really very thankful. And you said that Zabest is lucky that I am the part of Zabest. Rather, I must say that I am lucky that I am the part of this team who is not only a bunch of good performers, but the intention is very clear, and that is progression. It's the matter of great pleasure for me to be the part of this gathering in which speakers like stars around the world are gathered, and I must say from different countries which are close to my heart. Today, the world is in flux. The theme of this webinar could not be more apt considering the dynamic world we are thriving in the recent times. The outline of this webinar encompasses the aberrations in the financial systems all over the world. The world is moving to a new economic order, as Dr. Naveed said. and financial resilience is the ultimate goal. The concept of financial resilience that long stayed on the fringe is now in the mainstream. I'm pretty hopeful discussion would yield plausible outcome necessary for the stability of financial systems. The international participation from different countries will ensure the diversity of arguments that is necessary for comprehensive analysis of the situation. Dr. Ahmed Raza will enlighten us about financial resilience. Dr. Denius Piantina, I'm sorry if I do not pronounce it correctly, uh, will be sharing her expert opinion on fintech, and Dr. Sardar Naslihangolu. I am sir again. Please correct me later when your part is there how to pronounce it correctly. And you definitely will be discussing the financial statistics and risk management. You all are close to me, close to my heart, and I am from the depth of my heart are very, very thankful to you for sparing time for this learning forum. Dr. Shumala Zeb will be explicating the role of systematic risk in the overall fragility of the system. Dr. Hassan Hani, again a young scholar, will be elucidating the contemporary risk exposures and dynamic risk management. With this, as a student, I want to be the part of this learning forum, and I again hand it over to Dr. Naveed. Thank you, sir.
Dr. Shamsi, thank you for your this humbleness. I would say you have set the stage of this event with the bigger takeaway. Sir, thank you so much. And with this belief that this intellectual discourse, it's coming up with some adaptations. They are very useful for the future resolutions that we need to share with the policy making institution, including the World Bank. So my flight is all ready to see Dr. Ahmed. Dr. Ahmed, my flight is coming to you. I'm taking a flight towards Oman. Since you are the expert on the financial resilience, I could find your contribution towards the financial sustainability, your contributions towards these merger and acquisitions as well. So my engagement with your thoughts, they would invite the two areas that we want to address. We want to listen from you with this changing landscape, economic and social landscape in more particular, how we can have a quick compliance with that in the first instance. The second is, since I said this is a transformation towards the new birth of the global economy, so we need to find out what are the global trends that we need to align as individual, as the economic and the financial settings of the world, and finally, what are the barriers towards the financial sustainability? So this is my first round of discussions that holding your thoughts. Over to you, sir.
Thank you very much, Dr. Naveed. Can you hear me?
Yes, sir. Your voice is audible.
Thank you so much. And thank you so much for all the participants, particularly our friend from Portugal and Indonesia, and a lot of friends from Pakistan. Thank you very much for this important symposium to be here, and a great appreciation to Dr. Naveed and team to conduct this time-needed international event. It's basically to update our knowledge because we all are seekers. So here we will discuss what is happening around us with regard of super volatility. Let me say it's super volatility in economic numbers. Here I can see we have a mixed audience. We have respected faculty members, we have international participants, and a large number of scholars. That is much appreciated. As we have different levels of learning skills of audience, so let me first of all explain something about volatility so that everybody can easily understand this concept, and something about resilience so that everyone can easily understand this theorem as well and its application. So first of all, let's have a look on financial resilience. It's basically the ability to withstand life events that impact one's income or assets, what type of opportunities we have. It's all about resilience. So during these days, when global markets are facing history's worst financial crisis, I will tell you later on about the intensity of this global financial crisis, how it hit all of the types of economies and made all the myths, let me say financial myths and economic myths, wrong. However, in this current highly volatile economic recession, it is more important than ever to know how to deal with and ensure income changes, including individual income, including industrial income, including sectoral income, national income, global income indices. So, since the financial stress, we already know that its financial stress is very dynamic, particularly in current age. It's no more static. So all the conventional theorems of prudent financial forecasting, stress testing, volatility analysis are basically static risk management. So we can say that all the conventional theorems have been obsolete. Now you estimate basically on certain grounds. What type of grounds? Whatever you develop in your mind based on some certain analysis, what happens? Suddenly it overlapped. Why it overlapped? Due to systematic risk. So we can say that current global financial crisis due to this COVID-19 is the best explanation of systematic risk. That is still unavoidable, by the way. We are spending the last week of December and still everything is unclear to us. In short, nowadays all risk analysts, whenever they write their results, they write a covenant. And what is the covenant? Subject to pandemic-free environment, because everybody is helpless. So whatever their results are, they always write subject to pandemic-free environment, because they know what happened with financial leases, what happened with mutually agreed repayment agreements or plans, and how frequently loans are rescheduling without filing Chapter 11 or bankruptcy or no choice basis. Not only industries, but countries. Loans are rescheduling on no choice basis. We have no other choice. So, before go into detail about new pandemic challenges of 2020, first of all, let's have a look, small look on global economy and regional economy, how this history's worst financial stress or financial crisis affected regional and global economies. So first of all, a slight discuss on global outlook. This pandemic, this COVID-19 has delivered an enormous global shocks, leading to steep recessions in many countries, not only developed countries, not only emerging countries, all developing countries. So this deepest global recession in past decades have broken all the records. Let me explain that the baseline forecast envisions at 5.2% contradiction in global GDP. And this will be about close of 2020. And this is considered one of the deepest global recession in past decades. So per capita income in most of the emerging and developing economies are also shrinking. This pandemic highlights the urgent need for policy actions to cushion its consequences, to protect vulnerable populations, and improve countries' capacity to cope with similar future events. It is also to address the challenges posed by the informality and limited safety nets and undertake reforms that enable strong, sustainable growth. If you see our regional outlook, so this rapid rise in COVID-19 cases, even in forecasted, we are forecasting in 2021. We are seeing what is happening in the United Kingdom. We are seeing that what is happening in some of the African countries. Even some of the passengers travel from UK to India. So what is happening? So with new characteristics, this pandemic is spreading across the world. So whatever is prepared by the scientists to cope this particular pandemic, everything has to reshape. So together with wide range of measures to slow the spread of this virus, it has slowed economic activities in many emerging and developing markets. So growth forecasts for all regions have been severely downgraded, and many countries have avoided more adverse outcomes through sizable fiscal and monetary policy support. So despite of these measures, per capita income in all emerging markets, all developing markets are expected to contract in 2020 and more likely in the next year, in 2021. And it causes many millions to fall back into poverty. So whatever the steps, whatever the measures countries are taken to reduce the poverty, everything just on freeze situation, on no choice basis. Nobody has no other choice. So here, cause of financial crisis are clear. We have cleared that how this COVID-19 affect global activities and regional activities, but we have to understand the mediating effect of financial stress, how it is mediating, how these effects mediate between financial stress and macroeconomic indicators. So first of all, let's have a look on it for our better understanding. First of all, we have to understand about the capital structure formation. What's equity, what's bank debt, and what's market equity. How a balanced capital structure companies survive and imbalanced companies have to face various challenges like repayment to banks, like shareholders' timely repayment, like downsizing of employees, like stoppage of new raw material supply, and downgraded effects of unemployment. So one thing is very clear, all the companies, all the countries having adequate and optimal capital structure arrangement, they are in a good position. And all the companies, they are suffering. Those companies or those countries have inadequate capital structure arrangement. So now let's come to the question of Dr. Naveed, how to comply with the changing environment in financial landscape. Here a big question is raised, Dr. Naveed. Big question is raised that what will happen in 2021 and how to comply with changing economic and financial landscape. So first of all, let's have a look on Morgan Stanley's financial forecasting, because they produced a very good graph having all the data, they collected data from around the world, and they prepared a graph that what is happening in 2020 and what will happen in 2021 and 22. And actually based on the data, they prepared a V-shaped relationship where the economies were and now where the economies are, and what is expectation in 2021 and 2022. And according to this Morgan Stanley graph for economy in 2021, they are forecasted 6.4% growth in the next year. But again, covenant is same, subject to pandemic-free environment. So first of all, have a look what happened in three types of economies. As a student of economics and finance, everybody knows that we are dealing with developed economies, we are dealing with emerging economies, we are dealing with developing economies. But in this pandemic, all the countries, all the economies have badly suffered. What happened in the world? How the landscape changed? Let's have a small look over it. If we see the global perspective, in only 1 year, 2020, the GDP decline is recorded 3.5% negative. This is first time in the history, by the way. But Stanley forecasted that might be in 2021 and 2022, it will be increased substantially because markets are being empty. There is a big room for production. There is a big room for retailing the products. So there is a big room. If we see the overall developed markets like United States and Europe, still December is going to end. They are maintaining a negative GDP with negative 5.4%. But again, question is there. So Stanley indicate that might be in 2021, they will regain, and again, they will find an appropriate GDP with 5.1%. So there will be expected growth of 10. But still they are facing issues. Everything is on forecasting, and forecasting is subject to pandemic-free environment. If we see only United States that never faced negative GDP, now they are facing negative 3.5, but they are expected that We will overcome this negativity in 2021, mid of 2021, with at least 3.5% plus GDP growth. If we see Europe, that is considered one of the leading economies in the world. In December 2020, we are sitting in 2020 December, they are facing minus 7.2% GDP decline. But again, they are hopeful that things will be improved if pandemic will be overcome and situation will be okay, and they are expected to improve with more than 5% GDP growth in 2021, mid of 2021. That will be after some settlement, will be around 4% in 2022. Same like Japan, the country of technology. Nobody can imagine. Still, they are facing minus 5.2% GDP decline. UK, the most affected country, but second largest market for the exporters. You will be surprised to listen. They are facing minus 11.4% decline in economy. But luckily or unluckily, this situation is less worse in emerging markets. On an average, it's minus 2% in the overall emerging markets. But surprisingly, China was the first country where this pandemic was started, and they destroy all the myths of economy and finance. But still, their GDP growth is positive 2.5%. And they are expecting 8% and 9% in 2021 and 22. But India is facing some problem with minus 5.7. Pakistan is facing problem with minus 1, and Brazil and Russia, they're also facing problem with negative GDP. So to be very fair, to be very frank, we should understand the reality that all analyses are based on the removal of current pandemic, or at least significantly reduction in this unstable situation. So that is, by the way, not is happening in current circumstances, because humanity is facing a reshaping of coronavirus with more different and difficult characteristics. So what will happen, nobody knows.
Dr. Ahmed, thank you so much. You have well captured the significance of the financial stress testing. This is the need of time, and the accuracy that we need to invite when we are looking into the forecasting, because we are half-drived. We are not in a position that we can well develop the investments, the portfolios. We can well develop the financial portfolios of the corporations, because this is not possible. Yeah. Your pandemic is not over. We are in that transition phase. So the two important takeaways: one is we need to have the accuracy of the stress testing. Second is we need to revisit the methodical parts on the part of the forecasting. That is very important. But at the same time, I just need to invite your quick thought. Then what should be the liquidity and the financial models that we need to develop during the time frame when we are facing uncertainty, and this is a consistent uncertainty is there. So a quick note from your side, since I have to travel to the other countries as well. So a quick note on the financial liquidity. What is the most optimum financial models for the corporations at the time? A quick note from your side.
Well, as we discussed earlier, since the financial stress is very dynamic in current business age, so it's no more dynamic, it's no more static. So there is a need to unleash the dynamic methods to cope with the dynamic challenges. If challenges are dynamic, then we need dynamic methods. So whenever any company, any market contact with me to find some solutions for this problem, I always suggest one thing: adopt FBM, adopt FBM, adopt FBM. There is no other choice. All the companies in the region, in Gulf region, in Europe region, in Asia region, who adopted FBM, they are still survive. So there is a dire need of FBM, flexible business modeling, so that businesses can absorb financial shocks by adding value or by using need-based technology. We have several companies in Gulf subcontinent and Europe where need-based business innovation is used to absorb abrupt financial shocks. So sometimes FBM entirely changed the value of product to keep it competitive in the market, even they have to face severe financial shocks. Number one. Number two, you know that risk management is being more scientific now. So rather conventional risk management methods, certain types of stress testing is used nowadays to evaluate risk management, real-time risk management or real-time risk factors. So first of all, let's have a small look so that audience can easily understand what stress testing is. Basically a simulation or analysis, we can say it's analysis or simulation that is conducted to analyze how a financial or non-financial enterprise will be impacted under adverse market conditions. For example, if a financial market is crashed or a sudden recession is started, or just like we are facing nowadays, or changing in interest rate, and abrupt changes in interest rate, or we can say that an abrupt change in financial foreign exchange rates, or a sudden rise in unemployment. And by the way, we are experiencing everything in one go in this pandemic. All the factors we are experiencing in during the last 4 or 5 months. So stress testing is the only option that whenever you have some figures, some statistics, apply some stress testing so that you can find the real numbers. So globally, stress testing is conducted through different methods. There are 3 renowned different methods. One is CCAR, mean Comprehensive Capital Analysis and Review. Second is DFOST, mean Dodd-Frank Act stress test. And third one is using stress testing using the little bit lower inflation and interest rates so that you can find some real based results for forecasting, and you can have a better outlook what is going to happen in next, even there is a financial shock. So another very important factor to respond financial risk is to use financial derivatives. That is very important. Keeping in current depression, most of the global economies, even in Gulf, even the companies are being shifted their exposure on different derivatives. Whenever any economy, any country, any company want to secure inward or outgoing trade like import or export, so future and forward options are used. Currency swaps are used. Direct and indirect hedging is used. So like here in Oman, no, this is a restriction by government for every international transactions to keep it secure through various derivative options. Why? To avoid dynamic business challenges. And last but not the least, keeping all the changes in our mind, we should admit that impact of COVID-19 has given us a sense of business, how to absorb even worst financial shocks, and that is application of online supply chain and sales mechanism. That was not in previous. Just if you see 1 year before, situation was very different. For one of my recent study, Browse for Safety, you will see this just after publication of 1 or 2 months. Browse for Safety, I collected data from 3 different regions, and results are surprised. That physical isolation due to fear of COVID-19 weakens the relationship of social media engagement with physical purchase intentions, but strengthen with online purchase intentions. So there are different measures, but I would say again that my first and last suggestion, adopt FBM, flexible business modeling. Yes, Dr. Naveed.
Dr. Ahmed, once again, thank you so much. If I look into the quick takeaway from your side, you're talking about the dynamic aspect of your modeling. Then you're talking about the flexibility in the business management. That is the need of time. Now, I want to bring my flight towards the experts on the risk management. I could find the great lady from Zabist, Dr. Shumaila Zaib, having expertise in systemic risk management. Dr. Shumaila, once again, welcome on board. Thank you for having your time for this thoughtfulness. I could look into the systemic risk that adding a very spillover impact on all the aspects of your life as individual, as economic, financial settings, and we can say the entire global economy is going through these adverse impact is there. So I want to engage your thoughtfulness on 3 important areas. One is, what are the pitfalls of the existing risk management? How we can revisit our risk management, because what Dr. Ahmed he said, risk management is more scientific today. What are the advanced measures? What are the advanced risk management techniques that we can adopt, that we can address the risk management holistically. So over to you.
Thank you so much, Dr. Naveed. First of all, am I audible? I just wanted to reconfirm before starting.
Yes, you are audible, please.
Okay, thank you so much. And a very warm welcome to all of you, especially to our guests and our dean as well. And I could see a few of our colleagues and many of the students are here in this session. And thank you so much for calling me. Before going into the details of what you have asked, I just wanted to give an overview of what actually this systemic risk is and why and how it is important for any economies, including Pakistan and all the economies all around the world. Systemic risk is basically that means there is an event. We have certain financial institutions, if you take the example, because we have lots and lots of students here, and before talking about the techniques, I just would like to give them an overview of what actually is systemic risk. That we have, for example, if you take an example of an economy, so there are lots and lots of financial institutions, and one of the ability of the financial institution is that they need to interconnect with each other, and that interconnection could be for any means. So whenever, so that means that they are interconnected with each other, this more and more interconnection between the financial institutions is at times very profitable for the firms, for the whole economy, but at times there could be a negative event. A negative event propagating in one financial institutions could result in the collapse of all the interconnected financial institutions. That could collapse the whole financial market of a country, and that could lead from one country to all around the world, as we witnessed in the financial crisis of 2008. So first of all, it's very important for all of us, especially for the students, to understand that what is systemic risk and why it is important. And that is the reason after this financial crisis, the term which coined all around the world was too big to fail. That economies need to identify those big financial institutions whose collapse could be a nightmare for the whole economies and for the whole world as well. So in the period of financial crisis, as we are, this COVID-19 has entered whole economies in a new world of a new pandemic, a new world of panics and cries all around the world. So that means that if more and more financial institutions are collapsing, if they are unable to do their work, their interconnection, the connection between them is disrupted by any means, so that would create negative shocks for the whole economy. So this is one thing which we need to understand before talking about certain pitfalls. So we need to understand that what could be do to do two things. One is how to develop measures which are diagnostic. That means that if there is certain negative shock in the economies, how to diagnose it, that whether there is some shock that exists, and how to proactively find certain solutions which could help us to determine right at the start that something wrong is coming up, and so we must try to have certain measures in advance. So risk management, it talks about these two things. One is diagnostic, another one is prognostic. Then what are the pitfalls which Dr. Naveed asked us? Few of the pitfalls which are identified by the different researchers, that includes that inappropriate use of data. When we are talking about, as I would like to second Dr. Ahmed as well, that we are talking, when financial institutions are interconnected, we are talking about the data. We are now talking about the big data. That means things have evolved. This globalization has changed the whole paradigm. When we are talking about the big data, so that means our risk models now, our traditional risk models need to align themselves as far as the new technologies, new terms are coming in. For example, rather than solely relying on the statistical model, we need to bring in now big data methodologies. We need to bring in now what the data mining is doing. The underpinning philosophy of data mining technique is statistics. The machine learning, whatsoever it is doing, the undermining philosophy is statistics and econometrics. So today, we as an academicians, our practitioners, or even students, when we talk about risk management, so there is a dire need that our students, we being the researchers, we must know how to handle the data. And this is one of the identified pitfall as well, that we try to come up with the risk models, but we don't know how to interpret the data. We are just relying on whatsoever is in our mind as far as the results are concerned. This is another pitfall of the risk evaluation methods. Then another thing is interpretations of the data. If certain results are being given by some other countries, so we cannot say that, okay, this was the situation, but economical situations, the social conditions vary from country to country. So we must be focused to interpret our data, and how well we can interpret our data, that matters a lot. Then there's another pitfall which is being identified by the different researchers, is that we fail to fully consider all the possible outcomes of a solution. Or maybe that could be because of our knowledge, or reason could be anything. Then inappropriate use of risk criteria. At some time we overlook something, and we are just concerned about our significance level. We are just being the researchers, we are just concerned about that, okay, fine, this model is bringing up certain level of significance, okay, this is fine. And then last thing is that today is the time to work on FBM model, that is the flexible business model. You need to identify, you need all the organizations, either we talk about the organization, we talk about the economies, we need to adjust ourselves as far as the new things, new situations are concerned. Until and unless there is a lack of adaptability, especially in the risk models, or lack of flexibility, that could be another issue. That could be another important pitfall for us. And this is it from my side. Dr. Saab, what was just last question? Sorry.
Dr. Sumail, I think you have well captured all the significant areas. They are pertinent to your expertise. Since the time is money, looking into that significant, I could find that I am very lucky today. I have another expert on risk management. Can I say hello to Dr. Hassan?
Hello, sir. How are you? Thank you very much for being here.
Dr. Hassan, thank you. Thank you so much for taking your time. What quick takeaway that we have from Dr. Sumaila? She is talking about diagnostic, the process that we need to involve when we are looking into the risk exposure that is coming against the different dimensions of the life. The second aspect is highly important. She is speaking about we have to be very, very careful when we have the interpretations of the data, when we have the use of data for the estimations. I was looking into your dissertation of PhD. Since you are one of the most profound graduates that the ZABIS ever produced, to the best of my knowledge, I appreciate your entire PhD model that addresses the aspects of the dynamic risk management model. And you have also well articulated the spillover in the form of the sensitivity of the institutions. When we are looking into these internal, external, economic, and financial shocks, we can identify the level of sensitivity of the institutions. So with these words, what I want to engage your thoughtfulness, what is the practical significance of the dynamic financial models? The second is how we can give confidence to our economic and financial users during this pandemic. Over to you, sir.
So it's very kind of you to invite me here, and I'm very thankful for you providing me with this opportunity. So as we are discussing, I'm not going to take much time on that, as we're discussing about different flexible business models. So we should also enlighten our students about the fact that when we talk about flexible business models, there's a concept of profitability in the business. And now when we are going to look at the flexibility, now it is the time to look more into the liquidity. Because during that particular time of pandemic, majority of the businesses are not able to match their obligations that they have to pay. So quickly having a comment on that, and then as Dr. Ahmed was also saying about the derivatives. So there is an interesting fact about the derivatives that when during the crisis, BS Trans filed bankruptcy because during the 2008 financial crisis, its value became worthless because of loss in the derivatives. So derivatives also need to be looked into with an aspect that how to roll over them, how to match the maturity of the firm with that. And so as we discussed about the static and dynamic models, many static models assume that firms make one period decisions to hedge, and these decisions are irreversible and costless. Therefore, one period models also oftenly assume the employed risk management instruments have same duration as the lifetime of the firm. Treating risk management choices as reversible limits the ability of the static models to recognize the value. So we need to put in all the relevant indicators, as Dr. Ahmed was talking about the simulations. When we talk about the Monte Carlo simulations, we can also see that we have to bring in as much data as we can, and we have to move from predictive analysis to prescriptive analysis. As we know that predictive analysis is going to tell us what's going to happen, but prescriptive analysis also brings in the variables to let us know that high frequency, low probability events, if they happen, what are we going to do, but how are we going to respond to that? And in addition to that, as we all know that when there is a crisis, there are 4 different phases in that. The first one is the economy reacts to that. Then the second phase is resilience, then recovery, and then renewal. As all of us know that we are well past the reaction phase. Now we are in the resilience phase. So when we are in the resilience phase, we have to analyze what sort of decisions do we need to take. We need external factor driving planning. So what is going to happen if the external factors, just I talked about high frequency, low probability events. Then as I discussed about, we have to look into the right balance between liquidity and profitability. Then we have to develop a new balance between the operating expenditures and the capital expenditures of the firm, as we're talking about the flexible business models. Then contract renegotiations, and not just price and quantity, but also the payment terms. And then high frequency forecasts, then the budgeting cycles, and as we are discussing contingency, financial planning. These are the things that we need to incorporate in our analysis in order to make a true prediction of how to respond if there is crisis, because this is not the first one and this will not be the last one. So, sir, I think that
Dr. Hassan, thank you so much for your quick shot. I would say from the implications point of view, so this is the underlying philosophy that you have shared.
Right.
Once again, I would request to one of our the global panelists, Dr. Ahmed. Sir, I was looking into your practical efficacy. From that perspective, it becomes very important that through your working knowledge, if we are looking to have the closure of the first round of discussion, that was about the financial resilience during economic crisis. So I just need a quick thought of 2 or 3 minutes. You can please give the working thoughts from the point of view of the implications of these thoughtfulness that we have engaged. Over to you, sir.
Yeah, because both of the panelists, they already explained very well about the current situation and what is going to happen, and how a flexible business model can be helpful for the economy. I will just extend one of the model prepared by me and we have used in different research papers. There are 4 main financial resilience factors, which I strongly recommend to apply for compliance of dynamism. And these factors are economic resources, comprised of savings, debt management, ability to meet cost of living expenses, and ability to raise funds in an emergency, and income. Second part is financial resources, like access to bank account, access to credit and needs met, and access to insurance and needs met. Third important part of this model, financial resilience model, is financial knowledge and behavior. That is very important. That knowledge of financial products and services, all the products and services which are available either in conventional banking or financial banking. A country And a company or a sector must have a complete knowledge of financial products. Then confidence using the financial products and services, what suits to their business model. And then proactive financial actions. Rather to come over through the financial shocks. So take some proactive financial actions. And last, the fourth component is social capital. It's very important. One of the most important factors, like social connections, access to social support in the times of crisis, just like we are facing nowadays, and access to community and government support when needed. Even in Pakistan, in Oman, in other Gulf countries, in USA, one of my few very good friends are working there. They are doing their businesses. Government is offering different types of facilities during this pandemic to manage them. We must have complete knowledge whenever we find such type of situation, that what type of measures we can take, what type of government support we can use, what type of financial product we can use. But everything can be useful if we are using flexible business model, because value has to change. If value will be changed, then definitely your company will keep competitive within the industry. Yes, Dr. Naveed.
Dr. Ahmed, thank you so much. The dear participants, the previous metaphor of the life was, if there is a smoke, there must be some fire. And I would say the new metaphor of the life is, if there is a data, there would be some decision making, there would be the business that is possible. We have the expert on financial statistics, and for that I need to make my flight towards Portugal. So Dr. Siddhar, I'm coming to you. I need to invite your thoughtfulness from the perspective of the significance of the data. I was looking into the publications. I was looking into the efficacy of your academic attire that is addressing three areas. One is that is the financial statistics. I'm going to club this area with the data analytics. This is basically the crux of all the hallmarks of the revolutions that are taking place. The second aspect would be, you're talking about the CAPM as well. I think now we have to not rationalize the significance of CAPM. We need to realize the significance of the CAPM as well. Since we already have a lot of discussions about risk management, so I would be more consistent with two strands. The first is, what is the right use of the data in your financial forecasting, in the financial estimations from the business point of view, as well as towards the forecasting as well. The second is the efficacy, the validation of the capital asset pricing model during these pandemics. Sir, over to you. Thanks for your patience.
Thanks your invitation and presentation, and also my best friend. We met with Mohammed 4 years ago in one conference. We fly at the same plane, but in the conference we met. We had some little bit kind of crash accident, but it's okay. We couldn't do anything. But thanks for invitation. Thanks give me to this opportunity. And I'm a statistician, yeah. I'm 100% statistician, but I'm working on finance. Thanks for all finance researchers like professors, commons, and perspective. My finance common side is weak, but analyze side is I am 100% is okay. For example, in the COVID time, I'm already finished to publish. One is finance, one is statistics. The first paper in statistics, forecasting, modeling, COVID, confirmed case of top versus countries. In that time, I start my all research, because first I have to decide which period is more affected. For example, the World Health Organization says as a pandemic, March of 11th. Most of is finance publication maybe focus that time as a crisis starting. In that time, I'm focusing to figure out to which date is more affected. If my first research we can say just the first wave, like a first lockdown periods, like the March to end of June. In that period, just as the confirmed cases downloads mid of February, no, mid of April. Then in the October, mid of August, again, European countries like goes up, and second lockdown start. In that case, I'm focusing on the stock markets and at the same time crypto markets. Crypto markets is more popular in this period because all people's insight and searching on something on internet. Maybe they prefer to like invest money to crypto markets. It's interesting point I figure out after the COVID period, crypto markets is less volatile than before the COVID period. But in that case, like I'm using the standard Kaplan model, but extension of Kaplan model, like the deal with the nonlinearities, like the time varying linearity, like the in that case I'm using advanced method, like the filtering methods, Kalman filtering, non-linear Kalman filtering, and segmental Monte Carlo simulation, something like that. The result, if you compare the models, like the before COVID and after the COVID, performance never changed. What's interesting point, like is the volatility after the COVID, why goes down. But another interesting point, daily volatility goes up compared to the COVID. But sorry, hourly, focusing on hourly data, volatility goes up. But if you are focusing on daily data, volatility goes down. I think the researcher will focus on this point. Why one is goes up, one is goes down. One is less volatile, one is more volatile. Anyway, I can say just as a time varying extension of the Kaplan is the best one compared to others. But as a starting of this presentation, say to you, just as the which date as a starting date of crisis, as a pandemic date on March 11, or just another decreasing confirmed rate day mid of April, or another increasing day mid of August. Maybe in the future, like is the again, many countries start using washing. Maybe mid of February, again goes down. Another crucial point, some countries never share the real numbers. For example, just now, just as focusing the exactly EU area, one countries never say the name of that country, but the countries, like the confirmed cases, follow the same step. One day goes up, one day goes down. You know, the same angle, never change the steps. In that case, I am confused the exact date of like the COVID period starting and affecting economy. Maybe some people thinking the first COVID confirmed cases in Wuhan, end of December, people say crisis started. In my opinion, my crisis start as a first day of lockdown in Portugal. But is there another criteria? The different countries follow the different quarantinas and the different lockdown periods. Some countries close shops. Some countries doesn't shop. For example, in Portugal, just only as a lockdown after at 9, 11 to morning 6, and the weekend after 1 p.m. But in my country, the lockdown now at the midnight of Friday to morning Monday. So 55 hours lockdown. How can this lockdown affect the economy? In my opinion, in any model you can use and you can analyze it. But instead of the whole countries, researchers should focus on the just only one country. Because the all countries different situation. But in the, I know, I also published the October 2018 crisis. You can, the economic crisis is different. Economic crisis spread all over the world just a week. What is the COVID? Every week, different crisis. Every month, get a different effects on the economy. Maybe the next lockdown coming, maybe more restrict lockdown coming end of March. In that day, how we can decide it? And which criteria affect the economy? So in this case, in my opinion, okay, we can analyze the data, we can find the results, but not exact results. Maybe we have the major data in 2 years later, because I have the confirmed cases analyzes end of May and use the same data now. Completely the countries update the confirmed cases, and this affect results. In the same situation, we can map like the economy. Maybe they will update their results, their values in the future. Another criteria, this is really popular right now, geopolitical risk. Like the people focus on the geopolitical risk and try to estimate, forecasting, modeling volatility of stock markets. For example, one country, some countries close everything, their neighbor never close anything. For example, in EU, you can go to another like the country, and you can support another country's economy because there is no lockdown there. How can manage it? How can like make a criteria? How can see, you know, how can we decide it? This period completely different than the standard economic crisis. This is not only depends on the economy, psychology, environment, everything. So is I am not sure, just as now I am focusing on CAPM. CAPM working anyway, because the basic one, you can do it. But the another factors, which factor you can add in the CAPM model, like the stock market of USA or stock market of UK. My first analysis of COVID, this is the worst case in Brazil, more volatile in Brazil, but now in France. How we can both countries in the same packet is kind of weird, you know. To be honest, my mind is really confused now. We will see maybe 6 months later, in my opinion. Thanks for listening. So I am statistician, you know, just a maybe weak finance comments.
Okay, Dr. Sardar, thank you for your thoughtfulness. I could find the way you have captured the 3 areas, they ultimately that invites a significance. One is you're talking about we need to have the better understandings about the volatility of the markets.
Yes.
The second aspect you're talking about, the quality of the data, only then we can have the quality of decision making that is possible. The third aspect, that is the extension of the CAPM. We need to look into the human psychology. We need to look into the all other anomalies. They are very progressively, they are becoming more predictive of your returns as compared to what is your absolute. So we need to be more relative in terms of the CAPM modeling. We need to be more relative in terms of the use of the data and the implications. Once again, sir, thank you so much for sharing your thoughts, for sharing your views. And I want to extend my thoughts from the collaborations point of view as well. Since you are the experts on the financial statistics, We have a good number of the PhD graduates. We have the good number of the quality of the research scholars. I want to engage the research models with the efficacy of the financial econometricians. So I think you are one of them. Thank you so much, sir.
Okay, thanks a lot.
Okay, now it's the time to visit Indonesia. I could find Dr. Denise. She still kept waiting over the long period of time. Thanks for your patience. Dr. Denise, FinTech. As I said before, the financial technology, that is a need of time when we are looking into this global economy from a global trend. My first thought is, please share with the audience, share with the participants, with the panelists, what are the enablers, what are the draggers of the FinTech when we are looking into the sustainability of the financial system, when we are looking into the financial inclusion. Since you have already shared with me that you have a success story of the FinTech in Indonesia, you can please also share the success story, the succession from Indonesia towards the adaptation of the FinTech. Over to you.
Okay, thank you very much. Am I audible to all of the audience?
I could find echo in your voice. Your voice is not audible.
Oh, I'm so sorry. So it's better for me to take off the headphones. Let me try that.
Dr. Dennis, could you kindly unmute your mic?
I'm so sorry. I'm still muted. Okay. Thank you very much. So thank you very much, Dr. Nafit. Hopefully my voice and audio is quite clear to everybody. Okay. Dear ladies and gentlemen, the participants and also the audience of the World Financial Forum on International Online Symposium. Okay. Good afternoon. Assalamualaikum. Greeting from Yogyakarta, Indonesia. It's quite heavy rain here, so hopefully the internet connection is quite stable. Okay, and I'm Dr. Dennis Priyantina from Yogyakarta State University. So it's a great honor for me to be invited and on this great event and to have, I think, the fruitful discussion and expanding horizon of the ideas. So on this wonderful occasion, I will deliver the topic about the FinTech and financial inclusion, especially here in Indonesia. So I think FinTech is just a new term for the long-standing phenomenon, actually. So the application of technology in finance. So short for the financial technology has the potential to reach underserved individual and also communities to the range of product and services, including mobile money and e-wallet, person-to-person lending, equity crowdfunding, alternative credit scoring, cross-border remittance, digital processes, and also regulatory technology. So FinTech encompasses not only the technological transformation of finance through digital financial services, but also the digitization and datafication of global financial markets. The emerge of new FinTech startups around the world, and mostly recently the emerge of giant technology platform engaging in finance. So financial technology emerged with the development of information technology, including the internet, and then the smartphone, the big data analytics, which enable faster and cheaper distribution of financial services. The FinTech presents a challenge to incumbent financial institutions as it offers alternative services to post-global financial crisis society. So FinTech also reaches parties that have been neglected by banks while providing better services to already bank customers. FinTech has changed the financial services landscape based on cross-sector services and it will expand its market share in the coming years. I do believe that. And this changing environment has facilitated the emergence of new players in financial services, especially non-financial companies such as smartphone manufacturer and also internet provider. So the preference for the millennial generation also open opportunities for fintech entrepreneurship. For Indonesia especially, fintech provide an opportunity to close current gap in financial inclusion and financing in this case. So when we talk about fintech, it's not talking about merely the finance institution or the business or the economic, but more or beyond that, we talk about how we can enabling financial technology ecosystem. So in Indonesia, there are 4 key focus areas where regulation can contribute to building a well-functioning fintech ecosystem. So the first is about organizational structure. So the previous presenter have a good ideas about the flexible business modeling. And then the second is capacity and skill building. And then the third is engagement and outreach. And the fourth is regulatory framework and incentive. Since alongside its benefit, fintech also come with significant risks. Customer protection and data security has been the main two concern, especially in Indonesia. So a significant disturbance in these services and this intermediation of regulated entities may potentially have served negative impact for the economy. Therefore, realizing this fact, government, especially in Indonesia, adopts wide strategies to support digital financial innovation in Indonesia. So the first is a holistic and balanced strategy. So government should ensure the resilience or safety or soundness of fintech and promote the innovation and competition. Fintech must ensure customer protection and its business to create and maintain trust in the industry. And then the second, the agile regulatory framework. So in this case, government should set the principle-based regulation for digital financial innovation, while acknowledging that the fintech industry is very dynamic. It gives the flexibility and also responsibility to the study to define codes of conduct and also the operating standard that fit with their business. And then the third is market conduct supervision. So there is should a body from the government that conduct the supervision from for the fintech. So government is accountable for regulation and supervision of the fintech. Meanwhile, fintech is responsible for managing their business by applying sound corporate governance, risk management, and also compliance. And then the fourth is about the regulatory sandbox. Regulatory sandbox is the government testing mechanism to assess the reliability of the business process, business model, financial instrument, and the government of the innovator based on specific predefined criteria. So hopefully this kind of regulatory could allow the government to gain a deeper understanding of fintech business model and risk, and also allow fintech firms to improve their business model and governance. And the fifth is the digital innovation. So nurtures innovation and responsible finance, which serve as a learning and innovation on the fintech, as also the media for coordinating and collaborating among the key stakeholders, and also as a laboratory for regulatory sandboxing. So that's perhaps the steps or the idea how we can enable fintech regulation in emerging and developing countries, especially the case in Indonesia. Thank you very much.
Dr. Dennis, thank you for sharing your thoughts. I was looking into the fintech in alignment with the financial inclusion. If we want to bring them on the same path, at the same time, we have to deal with the contemporary areas as well. Like I would say the cybersecurity risk, we need to educate ourselves. We are talking about fintech, we are talking about financial literacy, we are talking about digital innovations. But at the same time, I would say the risk is also more innovative and risk is more digitalized. So from that point of view, I want to listen from you if you want to address what cybersecurity arrangements that we need to invite at the institutional level to address this aspect, because the entire confidence of the people, the entire confidence of the business community that is associated with this area. If you could have the quick blinks on this important aspect.
Okay, so as we already know that the penetration of technology in the financial aspect is unavoidable to our economy. So how we can, let's say, try to make the minimum risk of the fintech adaptation has its own challenging. So it means that first we have to build trust for the from the customer point of view, such as the first is how the fintech can have a good customer protection, and also the regulation should protect the customer interest too, such as the issues as data privacy and also data security, and perhaps the cyber crime in finance. So I do agree with the previous presenters that big data use in finance is, in the one hand, is very beneficial to the economy, but in the other hand, it's a big risk, since it easy use by another party which have no interest with the data. And also, what is very important is how to increase the financial and technology literacy. So, in increasing the internet, the internet thing, and also the internet trading, and the use of the fintech, but if it doesn't follow by the good or technology and the financial literacy, it could be a nightmare. So the first is, for sure, we should increase the finance and technology literacy from the users, and also make a good what we call regulation on how the ecosystem can protect the customer protection, such as data privacy and data security. So it will increase the cybercrime in our finance while using the big data in finance, and also make a good conduct, the best practice for the what we call the player. Here is fintech corporation to deliver good services and can build the trust from its customer and also the society.
Dr. Dennis, thank you once again. The dear participants, I think looking into the significance and the thematic areas of our discussions, I think up to now we have well justified. In terms of our engagement towards the first round of discussion, that was about the financial resilience during the time of these systemic risk. The second aspect, that is the fintech, along with the financial inclusion. That is, I'm using the word, that is the financial democracy, in fact. Now it's a time to engage the thoughtfulness of the participants. So the time for the question answer session. So we look forward, if any one of you, since we have the representation from the industry, we have the PhD, MS scholars are there, we have very distinguished faculty from the different higher education institutions of the world. So over to you. If you want to have your certain queries, if you want to invite the thoughtfulness from the distinguished panelists of this forum. So the question answer session is open.
So dear scholars, distinguished guests and speakers, it's time for the question and answer session. We have already one question in the chat box from Ms. Ikra Arshid. What should be the limitations for crypto market and impacts of cryptocurrency, as these kind of investments are always risky? So please, if you could enlighten this question, then we can go with other questions. Keeping in mind Dr. Naveed words, time is money. With the significance of time, compose note is requested.
Okay, I think this question is more pertinent to Dr. Sirdar. He is talking about the volatility is comparatively low of these crypto markets as compared to the traditional markets. So, sir, over to you.
So please repeat the question again, because this is not exactly, because I don't talk about why crypto market is risky. Maybe some criterias. I know about like the criteria. Just I'm combine like a crypto market's behavior during the COVID time and pre-COVID time. I say just as the hourly data, pre-COVID time is less risky. But daily data, pre-COVID time, more risky than the COVID time. So in this case, I think the more financial discussion here, why daily and is the hourly behavior is different than each other. Maybe, in my opinion, depends on the again lockdown period. Like is the people out walking on the street and go anywhere, you know, never like maybe less deal with online shopping. Like I am thinking like a crypto market, like a online shopping. For example, in stock market in my country, you can buy a stock just the morning half past 9 to half past 4. But on crypto market, you can buy 24 hours and sell. Maybe in that case, for example, you know, the time difference in the world. In China, maybe lockdown time blocked it. And at the same time, maybe UK, maybe investor in China, definitely more than the UK. And also daily and hourly completely depends on the speed, like the selling, buying speed. In the future, this discussion will combine with another statistics model, like which criteria affect the price of Bitcoin or Ethereum. The people already analyze this one. For example, like the Google search, count of the Google search definitely 100% related to price of Bitcoin. In the future, maybe we will focus on like the Google searching in daily searching and hourly searching Bitcoin. Maybe we will figure out why is daily or hourly in the pre-COVID time or COVID time is different behavior. So this is it's not easy to focusing on the one criteria. Maybe stock market is possible. Maybe easier than the crypto market. In my opinion. Hopefully I help you.
Thank you, Dr. Sirdar. Can we see some other queries from the respective audience?
Dr. Naveed, may I?
Dr. Sir, over to you. Yes, please.
This is an interesting question, Ikra. And as I have been listening very carefully, Dr. Sardar, Dr. Dennis, and Dr. Ahmed Raza, if you just have a review of the thoughts of these professors, you realize the answer of your question is actually hidden in the discussion of all these three professors. You're talking about risk. Mind it, wherever we talk about decisions, risk is always there. We need to identify, we need to realize, and we need to measure it. Dr. Raza was talking about volatility region wise. So when there is a volatility, the risk is automatically built in there. And he gave a very good idea that if we talk about crypto market and international crypto market, so it varies from region to region. So there is a concept of financial behavior. So when you amalgamate the financial behavior with the volatility, so it becomes easy to understand the risk, associated risk, and you can measure it well. So it is always there. Similarly, the use of technology is important, as Dr. Daniel said, because you cannot understand the market and you cannot be the part of the market in crypto market particularly without using technology, and technology varies along with risk region to region. And similarly, as Dr. Ahmed Raza already identified, the flexibility of the business models. And it also varies from region to region as the technology, volatility, and behaviors change. So it is an amalgamation of all these aspects. So answering your question, I believe that if you consider all these factors, you need to be very careful in decision making. And as Dr. Hassan himself said, that decisions are important. And particularly in this pandemic situation, the dynamics are different. So you have to be very, very careful in taking decision, and you have to consider all these aspects: the volatility, region-wise, technology, flexibility in the business markets, and financial behaviors. So you have to consider all these aspects because where the decision is, risk is there. Sir, over to you.
Dr. Shamsi, thank you for your thoughtfulness. I am taking this opportunity as a knowledge seeker. I want to invite a quick thought from Dr. Ahmed. Dr. Ahmed, I was looking into the World Economic Forum that has recently been invited. That was, I think, the capturing the aspect of the finance for the development. What was the takeaway? It was the collective wisdom being invited by all the prime ministers of the world, by all the finance ministers of the world. The pecking order was basically addressing three areas. If we need to cope up with this changing landscape of the world to bring economic and financial sustainability, then in the first instance, we have to go with the SDRs. SDRs, they are special drawing rights that we have with the World Banks by every economy. This is the right time to use these securities. The second aspect was highly important. That is very pertinent to you because you're talking about the financial derivatives. The key recommendation of that forum was we need to educate our financial users towards the use of these financial derivatives, and we need to invite financial derivatives at the central bank level of the world. So what is your quick note? If we can invite the derivatives through the window of the central banks to hedge our exposure against the exchange rate, exchange some other commodities, and the financial securities as well. Since you're the banker as well, so this is closely pertinent to you.
Yeah, well, financial derivatives are very important, particularly for international trade. Whenever we talk about imports, exports, bank guarantees, letter of credits, always in order to secure the cross-currency fluctuation. For example, I'm working in Indonesia, but I'm dealing with USA. So there is a cross-currency parity. Indonesian currency is having a different worth like in US dollars. So in order to secure the volatility, the parity, maybe today parity is 2.4%. Maybe tomorrow it's 2.7%. Either I'm doing export business or I'm doing import business. I have to fix a certain amount against some hedging or future contracts so that whether the parity price increase or decrease, my limited margin, my calculated margin can be secure. For example, if my business, I have decided to minimum gain is 5%, 5 to 7%, and I'm sure that in this deal I will be okay with 5 to 7%. So why I'm greedy to get it to 15%? Because might be I will get a 15% if parity will increase, but on the same side there is a risk, it can be downward. So my margin that is between 5 to 7% might be disturbed. So it's better to secure all the international transactions, whether you are doing import, whether you are doing export, you have to book your forwards, and it is easily available for 10 days to 180 days across the world. You can hedge your all the transactions, even for countries. For example, if you are dealing with palm oil, or if you are dealing with oil and gas, so countries generally hedge their all transactions, so that at the time of payment, if payment is due after 60 days or 80 days or 90 days, or maybe after 6 months, 180 days, so whatever the parity, currency parity is going up or down, there is no problem, because your price, your parity is fixed as a certain rate. So you have to just pay a small commission, but your whole transaction is secure. So rather with companies as a private or countries, the transactions must be secure against certain derivatives. There might be a currency swap, there might be a forward contract, there might be a future contract, but always, I strongly recommend that whether your margins are clear, even the calculations of government at a government level, it's clear that you need a certain margins in the transaction. If these margins are secure, so why you're taking risk? If you're taking risk, so be prepared for any type of expected loss. So it's better to secure your margin and fix your transaction either using the forward or future contracts. Yes, Dr. Naveed.
Dr. Ahmed, thank you so much. I would say this is a self-assurance measures that we can adopt from the financial system.
Yeah.
We are looking into all these, the exposures that are associated, starting even we are speaking about the weather predictions as well. So this is one of the aspects that is, up to some extent, it becomes associated with the nature of the businesses as well. So understanding on that is the one aspect of these derivative markets. The second aspect, that is the use and the implications, that is highly important. Since the time is money, so I would just invite one more question. I could see one scholar, Mr. Izhar. He is more curious about how we can see the role of the fintech to discourage the shadow economy, how we can use the financial technology to discourage FATF, to combat anti-money laundering, to combat terror financing. So over to Dr. Dennis. Dr. Dennis, could you please unmute your mic?
Okay, thank you very much, Dr. Monte. So, perhaps in this digital economic era, the existence of financial technology.
Dr. Dennis, your voice is more clear if you not use this headphone. Your voice is more clear.
Okay, sorry. So I will put it off.
Please unmute your mic, and it's better. Thank you.
Okay, thank you very much. So the existence of the financial technology in this digital era, so perhaps bring the benefits. The first is from economic growth, which is it can increasing digital economic growth. And the second is the existence of fintech also can decreasing the unemployment. Here, reducing the unemployment to creative industrial sector. And the third is perhaps it can bring into the price stability. It means that keep the price stability in supply and demand functions. Since there is more competitive economics, there is more player that join into the economics. And then the fourth is we hope the benefit from the financial technology, it's about the financial inclusion. Perhaps there is the broader access financial services to people. And then from the educating people and culture about the financial technology in a digital economic era. So how we can use this financial technology, especially in developing countries such as Indonesia, perhaps it can broader the limitation, or it can broader and invite more player on the economics player, and also it can what we call make a good society. It's more awareness in the creating the economy, such as we can say that people, not only the big player can join with the economy, but also perhaps in the small and medium enterprises, and also from the household here in Indonesia, person to person can join with the economy through the digital economic, and so hopefully the economic growth, it will increase according to the more friendly environment of the fintech. So here is my point.
Dr. Dennis, thank you for sharing your views.
Thank you.
I was just looking into the line of action that we have, the adaptations. That is highly important. Whenever we engage our thoughtfulness towards these symposiums, conferences, workshops, carnivals, colloquiums, then ultimately the way forward is what we have for the adaptation for the future. Since the time is already up, so it would be my request to all the distinguished panelists, if you could please give in writing your strong recommendations. They are very useful for the policy making point of view, for the use of, for the working use of the economic and the financial users as well. So it would be grateful if you can give your submissions in writing. Since the time is up, and I could find the engagement of the worthy head of Faculty of Management Sciences, Dr. Shamsi is around. Sir, once again, it's over to you. And on my part, once again, my words of appreciations and acknowledgement to every one of you for having your time for this thoughtfulness. Sir.
Thank you very much. Am I audible?
Sir, you're audible. Sir, yes.
I am, from the depth of my heart, very, very thankful to all panelists. If I start, Dr. Ahmed Raza, Dr. Shumaila Zaid, Dr. Hassan Hani, Dr. Sardar, Dr. Yanis, thank you very much. I, as a student, realized that I was in a class, in a global class, where I was learning from teachers across the world, and so beautifully, so nicely, so humbly, head of speech. Thank you very much. Thank you very much for teaching to me and to all my PhD scholars. If I try to recap briefly, because it's a part of my learning as well, as Dr. Ahmed Raza was highlighting, the pandemic situation, financial and economic crisis that is around the world because of this pandemic. He was highlighting the data of Monte, Stellas regarding 2020 and 2021. Hopefully, but it is all subject to the pandemic-free environment, which is horrible. Because we are expecting by the mid of 2021 the same situation. It is again, the second wave is gaining peak. So all forecasting, again, it's subject to the mercy of Allah Rabbul Izzat. And we hope that things would be improving and better. As And the most important aspect that Dr. Ahmed said was flexibility, flexible business model. That is the key. What I understand, and it's the part of my learning, and I have one of the learnings of today is that yes, that flexibility actually takes you out of any crisis. And if anyone, any individual organization, group of organizations, society and societies start thinking from flexible point of view, they may come out from any crisis. As Dr. Shumala Zev said that new risk management techniques and use of big data, that is important because assessment, analysis, identification, and the solutions all are based on data analysis, and the data is big and getting bigger and bigger. Big data analysis and machine learning are perhaps the need of the time, not perhaps as they are needed as today, as they were perhaps not needed in past, but it is the talk of the time. It is the really need of the time. Fail to identify all possible alternatives or solutions and interpreting of data. It's true. So data analysis, big data, access to data, and important is important for interpretation and all these things. Dr. Hassan Hanif said about liquidity is a concern in pandemic situation, and it is true because liquidity causes bankruptcy, and liquidity is one of the ground realities. It's not only the data, as important the data is, as important the liquidity is, and in pandemic situation, one of the aspects that was hit, is liquidity. Similarly, decisions are important, are very, very important. So there is the need of taking timely, relevant, and correct decision with the help of these gurus, people like you sitting around the world. That is important. Dr. Sardar said very right because he has a very good, sound understanding of the volatility, and he was very right. We are having a world forum, but how beautifully he articulated that the world is basically a combination of differentiation. So volatility is part and parcel, and we have to keep an eye on the volatility. Different measures in different countries have different impact on economic crisis, and it's very much true. As he was also talking about CAPM, different CAPM models, and it is true that since the volatility is there, the differentiation is there, so likely the CAPM models would be different in different countries. Dr. Daniels was talking about fintech, creating enabling technology, which is the part of the ecology, and that is true. Now, the ecology is changing, and fintech and creating enabling technology, because he was talking about technology-based education or education and technology. So again, she was rightly said, it's a matter of ecology. Government interventions in digital financial technologies, and government is accountable for regulation. One of the very important aspects, we are talking about strategies in the pandemic and in post-pandemic situation. So government should play the role as a regulatory body to collect all these aspects that we are talking today. Innovation in the perspective of fintech is important. And last but not the least, fintech cyber security, because as the technology is, as cyber crime crimes are also increasing. So cyber technology along with fintech and risk management, all these things go together. I must say, I learned a lot today. Thanks to the team of Zabist, Dr. Naveed, Usama, Dr. Shumaila, Dr. Hassan. I'm really very thankful to collect these stars around the world and cause us to learn. With this, I am again thankful to you, and I hand it over to Dr.
Dr. Shamsi, once again, thank you so much setting the the stage for this closure, because before I was moved towards the end of the event, I want to in particular extend my special thanks to the team that has been the part of this forum. The IT team is there. I would find the even secretaries, the financial forum management team is there. So if this succession is taking place, so definitely we need to look into who are the unsung heroes of this part. The second aspect that is highly important, I want to finally engage this thought of the collaboration. I think this is the only part that remain untapped in our discussions. That is the collaborations. If I am going to clap with one finger, it's not going to make a loud impact. So clapping with 5 fingers, it can make a very loud impact. So I am the part of a smart institution that is being named Zabist. We are offering a platform for the collaborations. So our call is open. We can invite a collaboration on the knowledge exchange, research exchange. We can start with the student exchange programs as well. We can go with the strategic thoughtfulness on the organizing these events in the future as well. So, sir, you want to add something?
Go ahead with all creative ideas, with all innovations. It is a common platform, and we should learn from each other. So I'm very happy, very pleased with these ideas. Go ahead, shake hands, share learning, share knowledge. That is the ultimate purpose of human survival. Go ahead.
Yeah. Sir, thank you so much. So with these words, God bless you all. Have a good care of yourself, of your near and dears. Take care. Allah Hafiz.
Thank you so much. Thanks again to all.
Thank you so very much. Jazakallah lot. Yes, in these 2 hours, we traveled from Pakistan to Oman, to Indonesia, to Turkey, Portugal, back to Pakistan. Thank you for a wonderful global platform for the knowledge, wisdom, family. Thank you so much, everyone.
Thank you very much.